A company should seek venture capital financing when it needs capital to grow. And typically the companies that are good candidates for venture capital are technology businesses who are leveraging either tech-based or are leveraging technology to really scale without a lot of capital expenditure. That means that when you think about the Facebooks of the world or the Snaps or Instagrams or LinkedIn's or Netflix's, these are all companies that are good candidates for VC, which is short for venture capital. Venture capital is a very small piece of the private equity pie, which means that it is a form of finance where investors like Female Founders Fund and myself invest capital into companies to own a piece of the business, to own equity in the company, and then finance those companies until they hopefully grow and are IPO candidates. When I think about companies that are good fits for venture capital, these are companies and subsequently entrepreneurs and the founders of those businesses who want to grow their companies into billion-dollar opportunities. That means that venture capital isn't right for everyone or every company, but when you think about your business, you think about your goals for growing that company and ask yourself the questions of, is my company a high growth, high scale, and high margin business? Assuming that all the answers are yes, and you're comfortable taking a lot of equity dilution to grow your business, it's definitely a potential financing opportunity to think about. I think venture is a great way for a small subset of entrepreneurs to finance their business. VCs typically think about venture capital opportunities or companies generally in two ways. One, a good fit for venture capital, or two, the opposite, which is not a good fit for venture capital. And we call those businesses lifestyle businesses. Let me talk about the second part first. So when you think about what is not a good fit for, what company isn't a good fit for raising VC, these are typically companies where you want to own the business for a really long time, for over 10 years, and you want this business at some point in the future to generate cash and for that to finance your lifestyle, your life. And so those businesses tend to not be good fits for venture capital because the nature of VC requires that the companies that funds like Female Founders Fund invest in to exit, to sell or IPO at some point. That being said, venture capital can be a great way for some companies to finance their business. If you think about the big growth stories and household names that a lot of folks are familiar with now, whether you think about Facebook or Rent the Runway or Stitch Fix, those companies all raised VC and a lot of VC through the course of that company's life to grow the business and scale it to a multi-billion-dollar opportunity. When founders think about whether or not venture capital is right for them, a good thought experiment to think about when you think about giving up equity in your company is, well, do I want an entire cupcake or a piece of cake? In that analogy, you would think about it as ownership in a business, right? You raise VC to grow bigger companies, so you're growing a cake. But over time, you're going to sell pieces of that business to fund that growth, which means you'll ultimately end up with a slice of that cake. Conversely, when you think about a lifestyle business, you're going to own that whole cupcake forever, but it's going to take longer to grow and it may never be as large. And so there's never a right answer, but there's always going to be probably an optimal fit for yourself as an entrepreneur and for your company. And that answer can change over time, but it does depend on where you think you want the business to be and how comfortable you are giving up equity and subsequently some control in your business to grow that big opportunity. Let me start first by saying that I think if you're an incredible entrepreneur, money is really fungible, which means that there is oftentimes more money coming at you than you know what to do with. It's a good problem to have, but that means it's a problem that for VCs like us at Female Founders Fund, we need to find a way to differentiate ourselves. As an entrepreneur, why would you take one fund's money versus another fund's money? And this is where we've taken a step back and been really thoughtful in our funding approach. So at Female Founders Fund, when you take money from us, you're not just getting capital to grow your business, but you're also getting a community of other portfolio founders, a network of experts, a lot of ongoing programs and events that help on 5 main pillars. For us, it's fundraising, recruiting, corporate development, customer development, and press. And for all of those initiatives, we've stood up programming, ongoing services, and really value add opportunities for our founders to take advantage of. And that, to us, is much more meaningful than just capital and being an owner of a business. Founders come to work with us not just because we invest exclusively in female founders, but because they know that when they take money from us, they're not just getting a long-term capital partner, but also a long-term partner in the business where we're providing above and beyond services than just the money. And we're hoping that we're partners to you in this business and then the next and the next. And so when we think about these relationships in our industry, it's very, very relationship driven. And as a fund, we want to be partners to you and to our entrepreneurs for the very, very long term. Female Founders Fund was founded in 2014 with this point of view that the face of entrepreneurship, when you think about it 10, 20, 30 years from now, is going to look very different than what it does today and what it did 10, 20, 30 years ago. Fast forward to 2018, Female Founders Fund is currently investing out of our second fund, a $27 million fund. And we've been really, really fortunate to invest with great founders and companies like Rent the Runway, Zola, TALA, Primary Kids, and Maven Clinic. When we think about investing, we're looking to invest in industry leaders in markets that are huge or have the potential to be huge. Zola is the largest and fastest growing wedding registry in the U.S. Rent the Runway, I know many readers and followers are familiar with because of the dress rental service that they offer. Maven Clinic is a really leading edge, the first actually women's focused telemedicine platform to launch in the U.S. And we've also invested in companies like Eloquy, which does amazing fast fashion for plus size women. And even more recently, we've invested in companies like CoStar, which is a really, really cool astrology app, in Winky Lux, which is like Zara for beauty, and in companies that really think about the ways that consumer preferences are changing over time, in companies like Peanut, which is a social network for moms, and a bunch more that we're incredibly excited about. When I think about the future and trends that we're excited about, it's really, really tapping into how the world is changing. I know that sounds really, really broad, but what I mean by that is that we think about themes and how the world evolves, and we think about companies that are going to create products and services that really capture and amplify those themes. One of the areas that we're really excited about is the rise of alternative communities. And alternative communities can mean anything from, the Soul Cycle group that many women, really, really become friends with when they go to class at 7 in the morning every single day, to communities like Peanut, which I just mentioned, and Hip Sobriety, which is an educational and also community for people struggling with substance abuse, to communities like what CoStar is creating around astrology. And so this rise of alternative communities is really driven by, I think, a sea change, especially within Americans, to search for meaning and connection in community and places other than the church. And so this is not to say that religion is declining in the U.S. by any means, but that the search for meaning and the ability for people to extract meaning in other parts of their lives is becoming more accessible and accepted. Another area that we're really excited about is the confluence of health and wellness. And so what does that mean? Well, for us, I think about, and I know many folks have had this experience growing up as well, the doctor was always somebody you went to when you were sick. But that's really changing, right? When you think about the rise of acupuncture, when you think about the rise of self-care, whether it's mental self-care or practices like a daily yoga practice or a daily meditation practice, the boundary between what constitutes wellness and what constitutes healthcare is really, really blurring. And I think a lot of this is driven by consumers like you and me who are taking health into our own hands and saying, well, there's something that has to change about the system that we're in right now. And as an individual, I'm going to look for services and for companies that help me address my specific needs. And lastly, I think for this audience is probably most interesting is one of the trends that we're excited about is just the changing nature of work. What does that mean? I think more and more people are less excited about the 9-to-5 jobs that our parents had. And that doesn't mean that people are less excited to work, right? But we're really coming to the realization that very much like how learning and education should be individualized, working should be as well. And so I'm super inspired by this new generation of young millennials and Gen Zers who are taking matters, again, into their own hands and saying, well, I'm going to create a job that I love on my own terms. And that means that there's tons of opportunities for companies to help match people with jobs, to help people work remotely, to help individual contractors better bill, better invoice, better prospect for clients. And it's this real change in people really, almost the structure of work becoming an individual as a company, right, versus an individual in a company that we're really excited about. At Female Founders Fund, because we invest so early, the most important thing for us when we think about an investment fit for the fund is the founder and the founding team. What makes you as an individual and as a founding team the right people to take this idea and take it to make it into reality? And so this means a couple of things for us. One, we're looking for entrepreneurs with a unique point of view about the world. What problem are they solving in their personal or professional lives? Like, what really non-obvious realization have they come to? Two, it's, well, what have they done to demonstrate that they are the right people to execute upon this opportunity? Is it your background? Is it the amount of time and research and real expert level that you've developed within this industry? Is it a combination of the two? And then when we also think about entrepreneurs, we think about their ability to scale. So are these the right people to scale this idea and not just be the founding team and, a team of 1 or 2, but also take this to 200 employees, to 2,000 employees, and really create that $1 billion opportunity. More tactically, when I think about entrepreneurs being ready to pitch, it's always a little bit of a black box, right? Because I think funds have different things that they're looking for, but for us, it's definitely team, call it TAM and team. And TAM means market size. So we are also looking for companies that are in big markets, big existing markets, or in markets that are growing really tremendously that we think will become really important in the future. And when I think about the best pitches that I've heard, it's really about the entrepreneur telling their story, right, and telling their vision for the future. We're investing so early that it means that oftentimes there's not that many data points to go off of yet. So the metrics that the company has access to, they tend to be pretty light. But that doesn't mean that entrepreneurs shouldn't be prepared, right? Always have a pitch deck. I don't think you should have a business plan, like that 40-page business plan. I have no idea whoever reads those. Don't do that. It's a waste of time. But a pitch deck that really, really solidifies in a couple of slides, no more than 20, what your business is trying to do, the problem you're trying to address, the team, and why you guys are the best team to capitalize on this opportunity. Light financials, and then the ask. Like this is information that is readily available online, but having a good framework for a pitch deck and having that deck ready will be important. Think about that deck as a skeleton or a structure that you can use to take investors through your company's story. And when I also think about what is really great when we think about when we invest in companies, it's entrepreneurs who really understand their business inside and out, and that means having a sense of the metrics and also having a sense of the levers that you will use to grow the business. If you are selling a product online, have you done tests around online acquisition and online marketing? Do you have a sense of what the CAC, the cost of customer acquisition, is? Do you have a sense of what the lifetime value of your customer could be? Do you know what margins will look like now and how you can have margin improvements over with scale in the future? These are all, when we think about, and one thing that tends to trip entrepreneurs up early is that what we're looking for is not the answer, right? You don't have to tell me, well, we are our Our margins are 83.64%, right? I'm not looking for specificity necessarily, but I'm looking for an understanding of the business and an understanding of how those metrics improve over time. So you don't have to have the exact answer, but you have to have a really broad sense of how the business works and to be able to speak credibly to all the points that we just talked about. Firstly, when you think about pitching investors, don't think about it as an audition or as a presentation that you're giving. Really remember that who's sitting on the other side of the table is a human, and they want to have a conversation with you and get to know you and get excited about partnering with you as a founder to build the business for the very long term. Right? You're not sitting across the table from a nameless, faceless entity. You're sitting across the table from somebody, if all things go well, is going to be working really closely with you and growing your company for the next 7 to 10 years. And so when I think about, keeping that in mind, and when I think about tips to pitch your company, there's a couple of things. First, definitely come prepared, right? Come with a pitch deck, come with a real understanding of your numbers, even if you're not the CFO type. Really take the time to get to know your business and get to know the levers that move your business forward. It's fine to come with your co-founder. If your co-founder has competencies that are different, that can add some depth to the pitch. For example, if your co-founder is the person who has built the technology or has built the financial model, they have competencies that may be a little bit different from yours and can help the investors see the full range of skills that exist within the company. Definitely practice as well. And so every time when you go out and pitch a company, it can be a little bit nerve-wracking, right? You're like, oh my God, I've never done this before. This is really scary. Well, this is what friends are for. This is what your family is for. Go and pitch them. They don't have to know exactly what investors are looking for, right? But getting feedback and more importantly, getting more comfortable with talking about your business will make you more comfortable when you're sitting at the table and talking to investors on the other side. In New York, there's lots of different ways to do this, and there's lots of meetups as well that are really designed to help people refine their pitch. And so if you live in areas and if you look on meetup.com where opportunities like this are available, I definitely encourage you to take advantage of that. And then when I think about, tips for pitching, this is a conversation, but you are selling yourself. You're selling your ability as an entrepreneur to scale and grow that business, and that means that you have to be really confident about what you're doing. Do not undersell. I know a lot of people have a tendency, and I definitely used to be one of those people to say, well, I'm not going to really talk about my background because I'm not super comfortable talking about me, right? Well, what are investors investing in? They're investing in you, which means that you really need to underline and capitalize and bold when you're talking to people why you are the person to build this company. Take that opportunity to brag about yourself, talk about your background, your accomplishments, why you're doing what you're doing, and then also take that moment to really talk about your business and talk about why this is the right place and time to grow your company. One last piece of advice is to research your investors. Investors do a lot of due diligence on founders before they invest, and founders should definitely be doing the same on investors. It's always a much more fruitful and meaty conversation if you know the person on the other side of the table has invested in companies that have similar business models to yours, who are operating in tangential industries. Having that knowledge and understanding why you're talking to the person on the other side of the table versus just saying, well, you seem to have money, so I'm looking for money and that's why I'm talking to you. That's less interesting for investors to hear than to hear, oh, well, I'm excited about working with you as an investor and your fund because your fund has done X, Y, and Z that we look towards as examples. And I know you blog about A, B, and C or tweet about, A, B, and C where that really resonates with us and we think you could be value add to our business. One of the really, really exciting things for us as Female Founders Fund, given that we invest exclusively in female founders, is seeing just the exponential increase in deal flow over the last couple of years, from 2014 to now 2018, which is sort of crazy that we've been around for as long as we have now. We have seen our deal flow increase well over 10x. And that means that the breadth and depth of companies and of founders has continued to increase over time. That's super exciting for us as a fund, because one of the really important ways that a fund works is to find and invest in the best deals, and that's deal flow. For us, we've been really fortunate to have invested in the majority of our companies as inbound introductions from our existing portfolio founders, which again is why we spend so much time working with our portfolio companies and making sure that they are getting a really high level of service and a value add from us, so that when their friends or their employees are going out to start their own companies, our founders are recommending Female Founders Fund as the first place to speak to, because they've had such a good experience working with us. Differentiated deal flow for most funds is really important, and we've been really fortunate to have really kickstarted that flywheel of inbound introductions from our portfolio founders right when we started the fund. That being said, deal flow comes from a lot of different places. As investors, we go to a lot of meetups and events and speak on panels, and we have founders come to us afterwards. Other funds send us deals that they may be leading or are looking to syndicate or think may be a fit for us. Our unlimited partners, our funds investors, actually send us a lot of deals as well, and that's been exciting. And so for us, when we think about venture as a really relationship-driven industry, which it is, we've been fortunate to have these really great relationships that have resulted in fruitful introductions that have turned into deals, and those deals that we've invested in have turned into companies that have now gotten quite large. I sort of fell into a career as an investor, and that's not unusual for a lot of people in VC. So before Female Founders Fund, I was at a fund in New York called FirstMark Capital, doing mostly consumer investing. Before FirstMark Capital, I was in fashion, so I was director of marketing for a fashion house in New York called Norisol Ferrari. And so when you think about fashion, transitioning from fashion into finance, they both start with F. But what I was doing wasn't really similar. And again, my story isn't unusual, because investors come in all shapes and sizes and from all different backgrounds. And I do think that that's really important for investors to do, because your background lends your investment activities a special edge, because you have a differentiated point of view than everyone else, right? What you did before, your experiences that you had, lead you to be excited about opportunities that maybe not everyone would be excited about, but are going to turn out to be really, really big, interesting companies. And so I really leveraged my, I think, insights in fashion and understanding of not just marketing within that space, but also how the sausage is made, so to speak, when it comes to making clothing, to really apply that in consumer investing at FirstMark. And so that is one path, right? Going from operator to investor. But I think the really lovely thing about venture is that you don't have to have a specific background to be a great investor. There have been amazing and very, very well-known investors, especially in the Bay Area, where they were journalists, right? Or people came straight out of school and joined as an analyst at a fund. There are different paths to becoming an investor, and the road to doing that can be long and very different for people. When I think about aspiring investors and what they should be doing to become, to get that seat at the table in a venture capital firm, there are a couple of things that come to mind. One is interning at technology companies, interning or working at technology companies. Our portfolio, for example, we have 31 active portfolio companies. They're all hiring for college interns, whether it's you're in your undergrad program or you're getting your MBA. These are opportunities to really get into the weeds of a really rapidly growing technology company and see how things are done there. That gives you an understanding of how tech companies work, how tech companies grow, and then you can use that learning as on the other side of the table as an investor to really think about, okay, well, how does this inform my decision making around what companies to invest in? We also at Female Founders Fund have launched this amazing program called the F3 Fellowship. this program is open for college students or college women to act as a focus group for our portfolio founders and for us as a fund. And so the fellowship is really designed to be this year-long learning opportunity where you will be really directly working with the C-level of portfolio companies and for the partners at Female Founders Fund to provide feedback on new product launches, on new potential deals that we're looking to invest in, and on trends that you're seeing from your vantage point as college students. And then when I also think about the last thing that is really important for investors, going back to our earlier conversation around deal flow and creating differentiated deal flow and differentiated networks, if you can create a network, that's going to be the most valuable thing that you bring to the table, right? And so how do you do that? Maybe it's by launching a meetup of something you're really interested in. Is it music technology? Is it food and the changing landscape of food? Launching something and creating a brand for yourself as the person to go to about that specific subject. It's a really differentiated point because investors and funds, when they look to hire, are always looking for people who have points of view that are different than theirs and backgrounds that are different than theirs. Networking is one of those terms where when you say networking, it means a lot and yet nothing at all, right? And so when I think about networking, right, and especially professional networking, for me, this means finding the people who you can help and who can in turn help you. How do you create a network, though? How do you start from zero? Well, one, I don't think anyone starts from zero, and two, I do think it's starting from the people that are closest to you. If you're in college, it's creating a network of fellow students, right, who you think are really smart and motivated and are going to go on to do really interesting things in their career. If you're getting started in the workplace, it's creating a network amongst your peers, right, and then going out and finding, if you're in a small company, for example, going out and finding people who are in similar roles at other companies and networking and grabbing coffee with them. When I think about networking, what does that mean? It's not a more is more equation, right? So it's not the bigger your network, the more LinkedIn connections you have, the better off you are, right? It's really about creating real authenticity in those connections, right? And deepening the connections for people who you really want to be part of your, we'll call it part of your circle long term. In my career, when I think about my network, I sort of break it into a couple of different buckets. The most broad bucket would probably be like the LinkedIn network or something, right? People you've met once or twice and you're connected, and you could email them at some point to ask for a favor or to tell them about an opportunity, but these are light connections. And then when I think about the people in my network that have been really meaningful to me, it's really my mentors. I had a great mentor named Lawrence. I have a great mentor named Lawrence Lenahan, who was my boss at FirstMark Capital. I think about the other women in VC that I collaborate and co-invest very closely with, and I think about the the connections that have come up because I have gone and institutionalized some of that network. And so what I mean by that is a couple of years back in 2015, a very dear friend of mine, Jessica Peltz, who's a partner at NBC Partners, another venture firm in New York City, and I started this Women in VC group. We started it in 2015 because we said there weren't that many women in VC at that point, and we were wondering why we weren't connecting more and sharing deal flow and helping each other with opportunities. And we said, well, we can do something about this. And we went and created this Women in VC group, which when we started was 15 women. And I remember being really excited. I was like, oh my God, there's 15 women in New York who invest. But we've now since grown it to 225 women in New York, over 625 women across over 400 funds and over 15 different countries now worldwide. And that network has been super fruitful for me because not only has that allowed me to expand my reach and know that if I'm going to LA or Berlin or Nigeria, there's a woman within that network who I can reach out to. But it's also been really great because I've seen how that network has been used by other women to share deals, for example, or find new job opportunities. And the thing about networking and growing that is that before you start, it can be hard to figure out, like, well, how do I do this? And it's very much in your head, sort of like a 0 to 1. Like, you have a network or you don't. But the most important thing is to get started and to not think about, oh, well, how do I get from not knowing anyone to knowing thousands of people, but go from, well, how do I start from not, really having a network to being really directed and intentional about creating deeper connections with, say, the 5 people I know really well, right? And I think can benefit me and I can benefit them professionally, and you'd be surprised on how that network grows. There's tons of serendipity in creating in network growth. I think there's a lot of stuff that happens once you get out there. But the most important thing is to not be scared of going and asking people whether they want to grab coffee or not. Especially if you're in school, using your EDU email address is a very, very good way for getting people in the workforce to respond, because everyone loves helping students. And then again, like you see how that grows organically over time, but it's really about creating that activation energy internally to go out there and take the first couple of steps. So many lessons learned as an investor, and not just investing in companies and working with them after, but also working within venture and within a workplace generally. And so when I think about things that I would have done differently, especially early in my career, I would have been much more vocal in asking for help. I think there is, at least for me, there is always this thing of like, oh, I'm going to figure it out myself. I'm not going to ask for help. I'm going to do it myself. But, once I started telling people that this was hard for me or I wanted to get better at this, I found that it wasn't a showing of weakness. It wasn't saying like, oh, I don't know this and I suck, this sucks, I'm so sorry. But it was more about sharing in a really thoughtful way the ways that you wanted to get better at whatever you were doing, and empowering people and getting them excited about helping you achieve those goals. And so that's definitely something I would have done much earlier in my career, which is ask for help and be open about the things I want to get better about and learn more about. And that also, in turn, held me accountable to those goals, because I tell people that I wanted to learn more about, about cybersecurity or about cryptocurrency, and then that would be something that people would follow up with me on. Oh, so what have you done here, or what have you learned? And that was a good nudge for me to actually do the things I wanted to do. And then when I think about, my career as an investor, one of the biggest lessons learned is really realizing that this is a very long-term, relationship-driven business, and I'll tell you what I mean by that. As an investor, as a leader in a company, as a leader of a team, growing your leadership skills is very different than just growing your competencies as an individual contributor and growing your expertise there. And so that means developing and flexing some new muscles, which are much more EQ driven, right? How are you an empathetic leader, right? How do you enable people to trust you and confide in you? How do you make sure that everything you say you're going to do and things don't fall through the cracks? So you're dependable, you're reliable. And all of those things, again, whether you are leading a team, whether you're leading a company, whether you have a lot of high-level relationships with your portfolio founders, are super important, because that relationship, that trust that you're building, that reputation around yourself as a good person to take money from, a good leader to work for, that has tremendous, I think, long-term returns if you invest the right amount in it early on. And so when I think about lessons learned as an investor, either when I'm thinking about investing in companies, or in the post-investment, like working with companies phase, it's always about doing exactly what I say I'm going to do. It's about delivering when I say I'm going to deliver. It's about being really transparent and thoughtful and open with my portfolio founders. And it's about supporting them and really supporting their journeys as well, and giving back before expecting anything in return. And so these are some fairly broad lessons, and I have a lot of stories that go with each of those. But when I really think about, okay, what have I learned today? It's really about, okay, well, the amount that you give out, right, that you provide to other people, it comes back to you. And in my industry in venture, that's a much more quantifiable observation, because the amount that we give into our portfolio companies hopefully helps them grow faster, raise more money, sell for higher amounts, etc., and that is beneficial to us as a firm. But even when I think about it within a broader large company context, what you provide, right, in terms of dependability, in terms of inspiration, it comes back to you in spades. I have been really lucky to have a lot of proud moments in my career, but two that really come to mind and are, I think, more recent are two things. One, Female Founders Fund closed its second fund, and we announced this year. It's a $27 million fund, and we're using it to double down on what we think we do best, which is investing in and supporting female founders at the earliest stages of when they think about raising capital to scale their businesses. This was a really important moment for us, because when the fund was founded in 2014, the idea of investing exclusively in female founders was a little bit, of a head scratcher for some people. They said, "Oh, are there enough female founders? Do you think they're going to go to create big businesses? Do you think you will be able to attract the right founders?" And all of these questions that we were really confident in our answers to, right? But it would take time to prove that out to the rest of the market. And so fast forward to 2018, all of those questions have been answered, right? And raising a $27 million fund, which is, about 5x larger than our first fund, was a really big, quantifiable way of putting a stake in the ground and saying we are doubling down on what we believe to be the next big, metamorphic shift in how venture is done and the types of founders and companies that are created. We're investing in the real exponential power of exceptional female entrepreneurs and investing at the earliest stages where we think we can be more than just capital partners to our founders. And alongside that, the second most, moment that comes to mind when I think about the last couple of years is along the fundraising path when we were raising for our second fund. When investors raise money, it's sort of like startups raising money as well. We're going out to a group of institutional investors, whether they're endowments or foundations or pension funds or family offices, to ask them to invest money into our fund, so then we can take that, invest it in other companies. And when we were pitching Female Founders Fund, the investors on the other side of the table had similar questions and also similar reference asks, which is, "Oh, well, can we talk to your founders? Can you give us some concrete examples of how you've been value add?" And our answer to all of that has been like, "Well, you should definitely talk to our founders, right? We are an open book, and they will tell you exactly what we've done with them after, even before we've invested." And what was just really, really awesome to hear from our founders was that they always said, without hesitation, that Female Founders Fund was the most helpful investor on their cap table. Female Founders Fund is my most helpful investor. And for us, that was just really great to hear, because ever since we were founded, we've taken this notion that our founders are our customers, right? We are here to provide the highest level of service to our founders and our companies, and getting that validation from them, especially at such an important moment of raising another fund, of talking to other LPs to invest in our company and our fund, getting that validation and that support from our founders, who we think we've really worked hard for, was incredibly great to hear, and really energizing for us, and really galvanized us to say, okay, well, we're doing something right, and we should be doing more of this, and we should be really thoughtful about how we continue to scale out Female Founders Fund for the future. When I think about things that I would tell my 21-year-old self, I went to NYU, so maybe like one of it would be like, don't go out so much. I'm kidding. But the other thing would be, when I think about professional development and real career paths, it's a couple of things. When you're early in your career, it's an incredible opportunity to be really opportunistic. And what I mean by that is I would have definitely told my 21-year-old self to say yes to everything, to opportunities, to take that time in your career when you don't have a mortgage, you don't have kids. Take that time to explore things and really figure out what you want to do with your life. And it's your life and not just your career, because your life is so much more nuanced and richer than that. And when I also think about, one of the really incredible things that I've learned in speaking to younger women is that their desire to support each other, and to support each other as women, as professionals, as entrepreneurs, is above and beyond anything that I had seen before. And when I think about that type of support, it's just as valuable as investing money into companies and into your and into founders. And so that means that I would really think about, even when you're early in your career and you say, well, I don't really know how to give back yet, right? But think about the skills that you have, the special things that you do, the hobbies that you've cultivated over time, and use those things to invest in other women and invest in your friends, so that they can be better set up for success. And again, this doesn't mean money, right? Coming out of college, I had 2 nickels to rub together. So I'm not saying to invest money into your friends, but to really invest that time, right? Invest skills to help them, empower them in their careers. And again, when it comes back to giving back first and seeing what comes, giving out first and seeing what comes back to you, that's a really important piece as well. So the more I hold the notion that the more you give out to the world, the more comes back. And so even when you're really early in your career, understanding what you have that makes you special, what skills, right, that are differentiated, and using those to support other women in their endeavors, those are definitely the 2 things I would have told myself. So not think about yourself as not just, and your skills as really valuable, right? And think about that as an opportunity for you to give back, and then also be really open to opportunities. I think the really lovely thing about going on uncharted territory when you create your career path and really in your life is there's this awesome thing that happens, which is allows for serendipity at the edges, right? So when you go down a path and you're going to do this thing, right, there's always some stuff at the sidelines that happens, and being open to those things, right, those serendipitous moments, they can really, really change how your career grows, the networks and people that you meet, and then I think the long-term opportunities that come to you as a result of being open to new things.